Good morning. So I'm Amelia Dunlop, a partner at Deloitte, responsible for strategy and for innovation for our insurance practice. And I'm joined by my lovely colleagues. So Alexa, who is the CEO and founder of LearnVest, recently sold to Northwestern Mutual, but also the author of Financially Fearless, and receiving a number of different awards, including my favorite, Most Entrepreneurial Woman in 2012. So thank you for joining us, Alexa.
Thanks.
And also, we have Lena Mass-Cresnik, who is the SVP of Global Strategy and Innovation for BlackRock, has her PhD in Innovation and Technology from Oxford, and is also a part of the working group for the World Economic Forum on Disruption and Innovation. So thank you also for being here.
Thanks, Amelia.
So a year ago this week, Business Insider declared the headline that a huge wave of startups were coming to crush the big banks, right? And there was lots of anxiety in this very room as we talked about what was going to happen when FinTechs kind of ate the lunch of all the financial institutions represented here. And since then, we've seen a wave of responses, investment in startups. But I think together with my panelists, I think we're going to assert that it's no longer David versus Goliath. The story is really about the value that can be created in a combination of the two. Okay, so Alexa, I'm going to start with you. So you rather famously left Harvard Business School a number of years ago to found what became LearnVest. You had many, many rounds of investment. You're doing fabulously well. Talk to us about the logic of the value you were hoping to create in the combination.
So first, it's an honor to be here today. I think this is just such a fun, we're living in like the eye of the FinTech storm right now, in my opinion. So it's wonderful to be here. So my personal story is I dropped out of business school. I started LearnVest, raised $75 million from some really great investors and venture funds, and March 25th of 2015. So basically at the 5-year birthday of LearnVest, we got acquired in a very sizable deal by Northwestern Mutual. And lots of people ask me, why'd you do it? What was going on? And in a nutshell, LearnVest had just raised $30 million of cash. We had about $20 million of cash on our balance sheet. We were generating real revenue. So we were actually in an incredibly strong spot as we literally just raised around a few months before. The reason we decided to do it, and there was a ton of different interest coming in, was that actually what LearnVest had built was a very unique technology asset. We built cash flow-based financial planning. So in many ways, TurboTax for financial planning for America, in a way where we had cut every ounce of human time out so that you could have limited amount of human time to service the masses, if you will. And for us, Northwestern Mutual came in, and their CEO, John Schlifsky, who's an incredibly smart guy, he came and said, we have the exact same values as our business, which is we want to give more financial plans to America. You have the best technology. He was like, we have 8,000 financial planners across the country, 4.5 million households. Let's go build and give more financial plans to more people. And I think as an entrepreneur who started as client number one for LearnVest with a very deep mission-based company, which was I wanted to provide more Americans financial planning. It shouldn't be a luxury product. It should be an every person product. It was a very hard thing to not say yes to. And the other thing is Northwestern Mutual is a mutual firm, which means that they don't have the constant quarterly earning pressure. They did $28 billion in revenue last year. I mean, it's an incredible company as an entrepreneur to say, yes, I'd like to sign up for this. So that acquisition was literally a year ago, and have learned a lot and a lot of really great things. But I can say that it's going better than we expected. Right. And so it was a very purposeful combination. And every single month, we're making very, very thoughtful decisions to make sure we can realize that value of helping more Americans.
That's great. That's great. Was there anything you had to do in those early days to sort of protect the entrepreneurial spirit that you created for LearnVest?
Of course. Every day we're protecting the entrepreneurial spirit. And in fact, one of the reasons why I signed up for this deal, and it was a great spot to be in because I did get to make a decision. It wasn't we have to do this, right. And we had choices. So I signed up for this because they were so purposeful about making sure that they don't crush the entrepreneurial right. spirit. And in fact, actively every single day making sure that thrives and that we actually nurture it. So there's a lot of very purposeful things that are going on behind the scenes to ensure that we stay as nimble, we fail, we push things out quickly, all the things that make an innovation hub or a startup the fast, true innovation, that innovative environment is about failure, and big companies don't like failure. And so we're very thoughtful about what we do, and say every day we're living in the Harvard Business School case study of a 160-year-old company and a 6-year-old startup coming together, and it's really, really incredibly interesting work.
Yeah, I mean, one of the things that I find fascinating is you've recently taken on a new role, which is broader than just LearnVest. Can you talk to us a little bit more about that?
Yeah, so we got acquired March 25th. I had my first child 3 days later, so that was pretty crazy. That was a full week of life. And then by the end of 2015, there was an active decision made that I should also take over the client experience for all of Northwestern Mutual. So anything that touches the client, which, as you know, in this room is everything. It's call centers, it's paper, it's marketing. I mean, it's a lot. So very thoughtfully focusing on right now just the digital client experience, but really making sure that we can focus on giving every Northwestern Mutual client and LearnVest client the best possible technology that they can have.
Great, wonderful. So, Lena, from the other perspective, right? So, BlackRock has a really great history of being an innovative firm. You launched Corey, the kind of underlying kind of platform for retirement and investing from iShares. So, you have this legacy and this history. I'm really curious about the buy versus build decision around Future Advisor.
Sure. So maybe just to set the context, I think we are at a watershed moment. We're amidst a watershed moment right now in the asset management industry. And I think, the mind shift from last year, even at this conference, was that the robos are coming to eat our lunch. And I think, as Amelia, when you opened, noting that framing has shifted to the notion of partnership. And as Alexa just pointed out, that is essentially where we're headed. So our view very much is that digital advice or robo-advice should not or will not potentially usurp the role of the financial advisor, but rather in a hybrid approach, we can provide more optimal solutions in which you empower the FAs and the clients themselves through technology. So as you mentioned, BlackRock obviously is a very innovative firm. We have a platform, Aladdin, which has been the baseline of how we think about our tech-driven capabilities from the very beginning and origin of the firm. And essentially, as we were thinking through that, to your point, or question, buy versus build, what we were looking for were capabilities where by bringing both technologies together in terms of the Future Advisor acquisition, which occurred last August, and our own internal capabilities, how could we create something that really enabled us to provide powerful capabilities around tech-enabled advice, and specifically including personalized advice that allowed us to focus on the customization that we could offer to the client, in addition to tax-efficient portfolio management, mobile and online solutions and applications, online enrollment, and very importantly for scalability, multi-custodian support. And so over the last several months, I'd say since January, we've been focusing on various partnerships, and we've actually partnered with firms like BBVA Compass, RBC Wealth Management, as well as LPL Financial. And each of those is looking at very different potential ways of applying the technology in terms of Future Advisor, and that's essentially what we were looking for, having that level of capability to potentially apply it as an offering that's purely digital, or one that's more of a hybrid approach with also having the human advice component. But regardless of the mix, we are able to provide that level of customization and adaptability for the platforms that we are partnering with.
Right. Okay, so ladies, we're now at this point of potentially making it look really easy, right? Easy for the big and the small to come together. So I think we've got to have that honest moment to say, for both of you, what are the sort of non-obvious challenges or non-obvious, so the things that might have surprised you in the last year?
So, well, first of all, through the acquisition, we went through a very, very thorough process. It was 4 months of extremely thoughtful diligence on both sides to say, hey, we're really getting married. Do we both want to do this? So I would say there wasn't any massive surprise. There was a pretty good framework for thinking about, all the different things we need to consider proactively. I think the thing that is probably the biggest learning that we continue to have, but it was already on our radar, but it's just extremely important, is changing people. So the things that make a really big company really powerful are things like processes and defaulting to no, and you literally beat a concept into the culture, and then you have LearnVest, which we default to yes. We're like, absolutely try it. You have a great idea today. I can fund it within an hour. Go. So that magic that you don't want to lose. So it's actually being really thoughtful about when do people come together, when do they not, what things matter. And so we call it the third culture.
Okay.
that we're building together. And I think that was something that I think we're being very, very thoughtful about. But, it is the core of the innovator's dilemma, right? Which is people don't change overnight. So I think that is one of the things that is the hardest, which is you can have the strategy at the top, you can have all the money in the world to go fund it, but you actually need people willing to truly step out of their comfort zone, the existing people, or you need new people to be able to go and actually execute on strategy. I would say on a positive note, the thing that was really powerful is how committed the leadership team and board of Northwestern Mutual have been and are to this acquisition. They're all in. And I would say that is a very, very cool thing to see, that when they committed, they really, truly committed all the way. And I think that a lot of companies don't necessarily get that privilege to be able to commit all the way.
Right. No, definitely. In my line of work, I work with a lot of clients where innovation is something that they still dabble in, as opposed to kind of making that kind of commitment.
Yeah.
So, but Lena, your observations?
Maybe to spin the question a bit, I was thinking of, what are the potential opportunities that we've had in terms of lessons learned? And I think one of those, there's 2 points I would make. So one of them definitely ties into people. I couldn't underscore that more. I was going to flip it in terms of talent. So as you think about, the technology professionals that work both on our BlackRock solutions end and within the Aladdin system that we have as a legacy platform, as well as the Future Advisor, which has very much the culture of Silicon Valley and the tech entrepreneurs that are kind of coming to work there and draw there. How do we maintain that level of talent engagement and talent pushing for the amount of pushing the boundaries going forward? How do we kind of encourage that over time? And I'd say that the second lesson learned was really around, as we think about our own technology system and working with financial institutions over the last several decades, working with financial institutions has very much been in our DNA. And so how can we take that and leverage those relationships to have a better understanding of what our clients are actually looking for? So even of the partnerships that I mentioned, there are different applications or customization opportunities that each of those specific platforms are seeking. And we can work with those clients on a regular basis to incorporate that into our product development lifecycle, into our technology solutions lifecycle, and actually have that level of engagement over time, which has a huge impact on how we think about processes to create and develop the types of solutions that we can offer our clients in a customizable way.
Great. So, Lena, you and I had lunch last week, and we were talking about the fact that a number of our guests here today are not from the US, right? So there's a perspective of kind of, in your role globally, how innovation is different, but also how the startup community and the relationship between startups and kind of global institutions is different. Can you talk to us a bit more about that?
Sure. So maybe just to focus on Asia as an example, I think what we've seen across all 3 regions, if you think about the US and Americas being much more the incumbent when it comes to digital advice, in terms of having much more of an acceleration, and we've got obviously the established firms where we're already developing partnerships and whatnot out of developments here in New York and in the Valley and around the country. The EMEA region is a bit different, right? Because it's very fragmented from a regulatory perspective, but then you have regulation that actually is the impetus for innovation. So for example, in the UK last year, as far as retirement, they de-auto-enrolled annuities as part of pensioners' plans. And so now we're seeing a bit of pickup and momentum around retirement advice that can be paired with financial advisors in that market. In Asia in particular, it's much more leapfrogged, right? Everyone loves to use that phrase, but I spent some time out with our Asia teams last fall working with or looking at kind of WeChat, so Tencent's WeChat. You have Alibaba has Taobao. They're competing with Baidu. And everything is mobile. So everything is in the hand of the user. It's basically the equivalent of Facebook, WhatsApp, Venmo, etc., all in your hand, while they're selling technology as well as financial products with coupons and other types of offerings right there. And the interesting thing that I found was they're actually able to do it with an interesting liquidity component in that they could purchase something, sell something, use that same amount of money, and then purchase something else on the e-commerce site. And here, what you'll notice is that Tencent, for example, is an internet service provider. So they're the ones providing the platform that's in the hand of the user, and then they're partnering with various financial institutions in the region. So we've seen 3 different markets at different stages in the overall life cycle, and I think that's really exciting. If nothing else, we should be taking lessons learned from each of those regions, as well as the work that is being pioneered here as well, and apply that as you think about the appropriate solutions for your clients or your institution.
Right. No, it does seem that what the big institutions and the startups bring to each other and what is valued, it's going to be different in each of those markets.
Absolutely.
Good. Okay, Alexa, I know you remain passionate about this space and about how the future of fintech is evolving. Give us your sense of where you think it's going and what we're going to be talking about at this conference next year.
So I think one of the things that I love so much about this area of innovation is that it is all math at its core. It's all execution. It is such a So let's take financial planning. I'm a certified financial planner. I can take any household and take enough data points about them and say, here's what you should do on any hour of any given day based on what's happened in your financial life. So if you fast forward all the way to the end, why do you even need a customer to think about their financial life? You could potentially totally take that off in the same way that Google Maps now tells me to go left and right. I used to have to have a map and I used to figure it out.
They make it so easy you don't even have to think about it.
You needed advisors along the way to get from one place to the next. And now literally Google Autopilot or Waze, and it's just like left, right, go. And I don't really have to engage that much. I just need to tell them where I'd like to end up and they give me the most optimal path. Mm-hmm. Why can't your finances be the same? So that's one thing that I absolutely love. I get really excited about. I also get really excited about the fact that we're going to get rid of. So what does innovation really do? It makes things cheaper and gets rid of the friction. So it makes it easier for the customer. So when I get really excited about not just the fact that I got a great education. It didn't matter. I have no idea what to do with my personal finances. I had to go take a bunch of tests to really feel like I'm in control. The average person, or in fact, most people in America, can't do that. They don't have the time, they don't have the energy. It's a complicated topic. So we can get rid of all of that friction. The next thing we can actually do is the everyday friction, which is, why do I have to carry a wallet around at all? Why do I have to constantly think about my passwords? My eye scan or fingerprint can actually be my entryway into all of these things, which creates better security in lots of ways. So I get really excited about that. I get really excited to think about things being wallets. Why can't your car have a wallet? Why can't my home have a wallet? And I think that that's going to create a lot of utility for people. Lastly, and again, this is my favorite topic, so I could talk about this for hours. Lastly, I think a lot about how this innovation is going to make things so much better. So right now, when you think about a lot of the big decisions we have to make, even the products that are offered aren't going to make sense in 10 years. Right. There's so much friction between them. There's a reason why when you think about, buying anything from whole life insurance or picking a credit card, you're not quite sure how to think about it. Why can't a system run all of it for me, pick the products I need that optimize what's best for me, the consumer, with the most transparent, fast execution and pricing? So I think a lot of things that we think about in the insurance world, do you really need blood? Because I currently am wearing 3 devices that track what's going on with my health and my body. Right. So again, I think a lot of that friction will go away. And what I get excited about is it's going to be better for the customer. They're going to save more money. They're going to get the products that they need. They're going to be better protected. Less friction between how you actually get on and off devices, less friction with carrying your wallet, all of those things that you think about, I think we're going to actually go away in 10 years. I think the average American family is going to be better protected if the technology moves as quickly as I hope it will. And if it's not 10 years, it's 20 years.
So I think that's very exciting, but I want to be a little bit provocative and say that could mean that the role of the advisor goes away, right? So would you agree with that, Lena?
So I think in the future, as we see it today, as far as the evolution, right, there are different stages at which advisors are. I think the future will be this hybrid model as we think about how do you empower the end client as well as the financial advisor. So even among those today that are focused on saying that they want robo-advice, we had a survey about 4,000 Americans that was conducted late last year. 65% who said they want digital advice or a robo-advisor also said that they want to have a relationship with a financial advisor as well. And so as we think about that, what is the evolution in terms of the future? And I think, in terms of your point, Alex, in terms of getting excited, we're at exponential finance. So when you think about exponentials, it's about the democratization of data and the democratization of big data, and how do you take that and take it about the client and make it something that's customizable, but also offer a holistic, integrated solution. To your point about the variability in products as well as the future of products. Yeah. And so how do we bring that integrated solution together to be able to provide that to the client?
I think this topic's actually much easier if we just look at what we've learned in other industries. So 15 years ago, we had travel agents, and then all of a sudden the kayaks
Right.
you don't need a travel agent anymore. If you do, it's for like a very, very specific trip, like your honeymoon, and that's it. And travel agents, for the most part,
Right.
have
True.
been eradicated.
Yep.
You think about lots of other industries where there was a human at the center because they were the gatekeeper of information.
Right.
So for the most part, I do think in 20 years, you will have significantly less humans involved. That said, there is a degree of this, and this is where I think the products change. If the product is so complicated that you have to talk to a
Right.
human,
Just to understand it.
then what happens? The products will change. And we've seen that happen in other industries where why make it so hard for the consumer? So think about things like target date funds. Like, great, what if like my life could run that way where it's based on my age and I could opt in for the cheapest way to get there and it auto, will readjust based on what I need. But that concept could happen across a lot of products. And then the final thing I will say is there will still be a human for the emotional piece of it.
Right.
But that human could be replaced by things like conversational AI. There's so much that's going to happen with artificial intelligence that's going to be able to take off your. It doesn't have to be human; it can be human-like. And again, maybe that's 20 years, but we're definitely trending that direction because right now the main portion of the advisor is to be the gatekeeper of the fact that you know nothing and I know all.
Right.
And most of the time they don't know all. And actually, math, I'd prefer a mathematical equation to run it for me, because they're going to give me a better answer. And so I think this isn't like the healthcare system where I still want a doctor to look at my rash or look at my eye or do the surgery, but a lot of surgeries are not happening with robots.
Right.
So as you think about it, there will still be a human in certain places, and for the most part, it can be human-like, but we will see 85-90% of it become technology.
Right. What I like about the picture that you're painting is that it sounds like at the end of it, it's us as consumers who win. Right. I think that financial services as an industry has taken a lot of heat over the last decade around not putting the customers first, right? And the fact that there's all this friction, there's all these things that are way too complicated, right? Too complex to understand.
Hidden fees, things that aren't the best for you, et cetera. Correct.
Right. No, so I think that's exciting, and I look forward to that future. So maybe on those words, I will thank you both for joining us, and thank you for having us at this event.
Thanks, Amelia.